don't come up very often. So Sherry wants to sell. This is his best chance to buy that. I also think that this sort of puts him on a different playing field, if you will. You know, Skydance is a nice company. It's a production company. They have money to finance. They own pieces of businesses. But this would make him, you know, one of the premier media moguls around, because suddenly he'd have this big empire, and he's going to believe, as many who've come to Hollywood before, that with money and with his strategy, he can accomplish something that the current leadership is not. And so I don't think they're going in with any naivete. They see the challenges ahead for a company that makes almost all its money from declining cable networks. But they see a chance to buy a rare asset, and then they think they can turn this thing around.
Well, right, because they get with it, right, a struggling streaming service, right? It's been losing money, or I should say, describe it that way. They've also got a bunch of cable networks. I mean, these are businesses, right, that are having difficult times. So he's got to also, that's part of the fix, right? Or he hopes to.
Yeah, well, there's a belief that they can fix the streaming service. Cable still generates plenty of cash. It just is in decline. The key would be getting streaming in a more solid place. And they, like the current management, I think, believe that the best way to do that would be to combine Paramount Plus with another streaming service, strip a bunch of cost out of it, and hopefully be able to combine the audience of those two to make it a real competitor with Netflix and Amazon and Disney.
Can you explain how this deal would work?
So David Ellison and his financial supporters include father, Larry Ellison, one of the richest men in the world. It includes private equity firms Redbird and KKR. They have already agreed in principle, really, to buy National Amusements, which is the Redstone family holding company that has a majority of the controlling shares in Paramount, because Paramount has two classes of shares. There's the controlling shares, and then there's the common stock. But that deal will only happen if David Ellison can negotiate or complete a deal to merge Skydance with Paramount. He's now in an exclusive negotiating window with the independent committee of Paramount's board, which is everyone who's not Sherry Redstone and not the company management, to try to make that happen. Should that happen, you'd see this two-step deal. And then they're also discussing some ways to make those common shareholders who wouldn't get the cash out feel better. And that could be getting rid of the dual-class structure. That could be paying a dividend to shareholders. That could be share buybacks, something of that nature. And then if that happens, effectively, Paramount and Skydance get merged together. I assume it continues to be called Paramount. And David takes over as CEO, with Jeff Shell, who used to run NBC Universal, as his deputy.
Something really weird happened today, which is that shares of Paramount Global, ticker PARA, this is the non-voting Class B, were down 7.5%, but shares of the voting class, Lucas, were higher. It's PARAA, were higher by 2.6%. I'm not going to ask you to explain the intricacies there, but I mean, this is like you don't typically see things move in different directions like this when they're a dual-class share company.
Yeah, I mean, I think the feeling is that the people who own the voting shares will get paid a premium of some kind in this deal, and that the common shareholders will not. And so that's why that's moving in that direction, or at least that's what I would assume. But you also saw, you also saw Matrix, which is a shareholder in the company, come out against the deal, and I think you're probably going to see a lot of that, because you'll see folks who are wondering if this is the best scenario. If you're going to sell, why do a deal that only makes the Redstones rich and not one that makes everyone rich?
Yeah, it's a fair question. Well, to that point, does Sherry want to do this deal? I mean, Apollo, Warner Brothers, she wants to do this deal. What about some of the other deals? I feel like we've been talking about what's going to happen with Paramount for a while here. What about some of the other options that have been out there and that we've certainly reported out, that you guys have reported out?
I mean, it's up for debate how real the other options are. So Warner Brothers Discovery has definitely met with Sherry Redstone, met with Bob Bakish, the CEO of Paramount. They have not put together an offer. I don't think they've really pursued this deal in any kind of serious way. And the market reaction when there was sort of a leak about their meetings was pretty negative. Apollo is a little more complicated. They have been around the asset for a while. They were not pursuing it as seriously as David Ellison has been. That changed a couple of weeks ago when they submit an offer to buy Paramount, but just the studio, Paramount Pictures, not the company, Paramount Global. Sherry's not interested in selling just the studio. I don't think the company's interested in selling just the studio, because then you're left with a bunch of assets nobody wants, and that's not fun for anyone. Apollo, then there was the debt for Paramount got downgraded by one of the major ratings agencies, and there is sort of a change of control provision in the debt that we don't need to get into, but it meant that Apollo now thought that they could effectively roll over the debt. They would only need to buy out the equity, and that made it an easier deal for them to swallow. And so they came back with an offer for the whole thing. Now, there's a lot of debate as to how real that offer was. There are people close to Sherry who say that they don't believe that Apollo has the financing, that they sent a letter saying, yeah, we're interested, but we're not using our fund. We need to go out and raise some money. There are folks on the Apollo side who say it is a real offer. My guess is it's somewhere in between. I think there's also some reservation about selling this company to a private equity firm. Sherry would like it to sell it to someone who wants to invest in it, and that's something that David Ellison and his camp have to offer.
Well, it's interesting. Just got about 20 seconds left. I mean, it sounds like Sherry, she might want to even have a little bit of a stake still in it, right, when all is said and done, and not completely walk away.
She's thinking about rolling some over, both to participate in the upside and as sort of a vote of confidence in this deal.
All right, really cool. Do you have any idea, like date-wise, time-wise, clock ticking? Like we've been talking about it forever, Lucas?
They hope to get a deal done in the next month, right? But I'm sure this is going to be something we'll talk about for the rest of the year, even if it gets done.
All right, good stuff. As long as you're around, we'll do that. Lucas Shaw, Bloomberg News entertainment reporter, joining us from Los Angeles. Check out Lucas and the team's reporting. Just head to Bloomberg.com and also on the Bloomberg terminal. This is Bloomberg Radio.
Join Brian Curtis and Doug Krisner at 8 p.m. Wall Street time for Bloomberg Daybreak Asia. Tonight's guests include Wendy Cutler, Vice President of the Asia Society Policy Institute. Daybreak Asia tonight at 8 on Bloomberg Radio.
Now your 3-day weather forecast on Bloomberg 1130.
Partly to mostly cloudy skies for tonight. Low temperature midtown between 50 and 55, a little bit cooler in some of the suburbs. Then for Tuesday, developing sun, low to mid-70s, a much warmer day. Showers arriving later at night, though, and for Wednesday, chance of showers under cloudy skies, cooler in the 50s. Periods of rain and low 60s expected here on Thursday. This is Gary Best here with your 3-day weather forecast on Bloomberg 1130.
Wall Street prepares for the latest read on inflation.
U.S. core inflation top forecast for a second straight month.
It's a little bit of a hot inflation.
Will the slow progress toward the Fed's 2% target continue?
What do you think Fed Chairman Jay Powell's going to take away?
Instant reaction on Bloomberg Surveillance.
Clearly, there's a feeling here of buoyancy in equities.
Inflation in focus. Wednesday morning at 8:30. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. And always on Bloomberg 1130. Context changes everything.
Access a vast selection of global fixed income securities at Interactive Brokers Bond Marketplace. Search their deep availability of over 1 million bonds globally. IBKR has no markups or built-in spreads and low, fully transparent commissions on bonds. IBKR displays the highest bids and lowest offers received from the electronic venues they access. In addition, clients can interact with each other by placing bids and offers online to execute their trades. Learn more at ibkr.com/bonds.
And now Martha Stewart for Skechers. When I make a dish or embark on a craft project, I always use the finest, most fabulous ingredients and materials. Which is why, when it comes to footwear, I love Skechers. Because Skechers is the comfort technology company and uses the most luxurious, innovative materials and designs to make wondrously comfortable footwear with all the fits and features like Arch Fit and Skechers' world-famous air-cooled memory foam. It's exactly the way I'd make shoes.
Find Skechers at a Skechers store, Skechers.com, or wherever stylish footwear is sold.
MassMutual is leading wealth management by offering financial advisors the best of both worlds, providing resources to run your business and freedom to run it your way, helping you make a name for yourself with our good name behind you. Learn more at massmutual.com/wealth.
Mr. Clean, Mr. Clean.
Of course I use Mr. Clean Magic Eraser to clean tough messes off my stovetop and bathtub. But then I discovered I can also use it to easily clean my patio furniture and even my shoes. I'm hooked.
And when wipes won't cut it, I use Magic Eraser Sheets. They're thin and flexible erasers, perfect for everyday messes, like gunk on my counters and sinks. They really are magical.
The reviews are in. Mr. Clean Magic Eraser and Sheets make cleaning look easy.
Build American Mutual insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in BAM-insured bonds.
Coming up next on a Bloomberg Business Week, we're going to be speaking to the chairman and CEO of Stagwell. He's also the chairman of the Harris Poll. Talk to us a little bit about what's going on in the election.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. Turned out to be a mixed Monday, an eclipse Monday with the Dow, the S&P both lower, little changed, and NASDAQ higher, also little changed. S&P was down 2 points today, down less than 0.1%. Dow Industrials down 11, a drop there also of less than 0.1%. NASDAQ higher by 5, little changed, up less than 0.1%. 10-year yield 4.41% with a 2-year at 4.79%. Bond yields hitting 2024 highs. Spot gold today up $8.50 the ounce, up 0.4%. 23.38 the ounce on gold. A retreat for West Texas Intermediate crude, pulling back from a 5-month high after Israel said it would remove some troops from Gaza. Crude has rallied recently on escalating geopolitical tensions and supply shocks, raising the prospect of prices for global benchmark. Today we had shares of ExxonMobil lower, down today by 0.7%. ADRs of BP little changed, up by about 0.7%. Chevron shares fell by 0.2%. Again, recapping, stocks lower and little changed, with the S&P down 2 points, down less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stenovic live here on Bloomberg Business Week, getting ready for what's going to be an interesting week, I think, in terms of whether or not we get another reset in terms of Fed expectations, rate cuts, how many, maybe not many, maybe not one, I don't know, but the CPI report comes on Wednesday, and then we also get the FOMC minutes as well, so we'll get maybe some, potentially, maybe a little bit more in terms of what was going on at that Fed meeting and the decision.
I did find it interesting, the bond yield side of this.
Today?
Yeah. Treasury 10-year yields rising to the highest since November.
Yeah.
Striking distance of 4.5%.
Yeah, that's what we're focusing on, right? Yeah. We'll see whether or not we get there. Hey, another story, though, that caught our attention over the weekend. It was in the New York Times. It was asking if corporate America is in denial about Donald Trump. The prospect of a second Trump White House is something we talk a lot about on air with leaders running publicly held and private companies, nonprofits, really all kinds of organizations. The bottom line is whether they are prepared for what could be a tumultuous 4 years, as we kind of talked about with, I think, Carl Schleif earlier, about what's coming, or maybe it was one of our other guests, in terms of what will the election outcome, what will it mean in terms of regulatory policy, what it means for the financial sector. There's a lot of questions.
Yeah, for one view on this, we welcome back Mark Penn. He's chairman and CEO of the marketing company Stagwell. He's also chairman of the Harris Poll, which is owned by Stagwell. Mark joining us from Miami this afternoon. Mark, good to have you back with us. What are the executives that you talk to? What are they saying to you about the prospect of who wins in November?
I think executives mostly are just trying to get through the election season. They don't want any interruption of business. They don't want to get pulled into politics now that politics is going to be in its kind of most frenetic, best or worst, depending upon your perspective. And so I think executives are looking to get through the season, let the country decide, and then move forward from there.
The one thing I want to ask you about, and this is the New York Times piece over the weekend, and what they posed in kind of getting ready for what the next 4 years is, that a second Trump administration would be very different, with promises of, and this is from the Times, a more populist economic agenda and a more populist governing style to match. I think there are a lot of business leaders, some would argue out there, Mark, that think it's just going to be maybe a repeat of the 4 years. So maybe, mixed messaging, some, but that in the end, maybe there will be some policies that come out that are actually good. Maybe whether it's the pushback on China, whether it's on some different things, if you will. If it becomes a more populist government and that there's more control over the federal government, would that be unnerving to a lot of to the folks that you talk to in the corporate community and that you work with?
Look, I think you have to look at really where the policy differences are likely to lie, and you have to sort of get out of the New York Times analysis of what appears on X. I think that in reality, what's going to happen to trade? This is more of an America First policy, and so that means he's going to put more barriers to trade, particularly with China. I think that's clear. Taxes, probably going to look to reenact the tax cuts and keep the corporate tax down, which is good for corporate investment. Climate change, probably going to emphasize, traditional energy sources and undo some of the climate change. So depending upon which side of that you're on, it's probably going to go, in that direction. And so I think when you and if you look at immigration, again, depending upon whether or not you're looking for lower labor costs or more restricted immigration, whichever you think, which might give you lower growth and higher labor costs. I mean, I think you have to really look at the policy differences that are likely to be implemented. Right. Forget all the fluff, forget the X, forget the speeches, and that's really what is going to affect business and the market one way or the other.
What about a Biden administration? What's the thinking about what a second Biden White House would be, a second term of a Biden White House?
Well, I think Biden said he's going to do more climate change. He's going to move EVs up and EV infrastructure up. He wants to raise taxes, on companies and higher-making individuals. I think you see he wants to increase government spending. And again, if you're on the side of, if you're a government contractor, good news. If you're concerned about deficits, maybe not as good news given the size of the budget that they delivered. So again, those are kind of the issues. And of course, how the makeup of Congress will also temper, both, regardless of who wins, because we do have checks and balances, the makeup of Congress in which people think that the Republicans are likely to take the Senate, the Democrats likely to take the House, will have a big impact too.
Hey, Mark, you, of course, people know you for the work that you've done over your career, but including being White House pollster to former President Clinton. And I'm just wondering from your perspective what the polling is telling you. Like if you're analyzing these polls right now, the current president has made up some ground in key swing states, including Arizona, Michigan, North Carolina, Georgia, Wisconsin, and Nevada, but he still trails the former president. What's your analysis of the situation if you had to make a guess as who's going to win in November?
Oh, look, it's a long way to November, and I kind of tell people there are so many events that are still out. You look at the polls today, and Trump has a lead. What is that lead based on? We're replaying the same election that occurred before. Voters have a tendency to make the same choices over and over again, and so you've got to say what's different. What's different is people's assessment of Biden after 3.5 years versus when Biden was a promising candidate. And you'd say right now in the, my poll, he's up to 45%, and some other polls 43%. I think if he gets an improving economy, he's got to get his job rating to kind of change the current situation up 3 or 4 points. He's got to pitch more to swing voters rather than worry about the base. And having been there, he's got to focus on improving his job ratings, not by saying the economy is better, but again, by making people comfortable that he's addressing immigration and inflation, which are the major two issues that were not in existence